Cryptocurrency trading and crypto arbitrage may appear to be complex terms, but I will provide a comprehensive explanation of how you can profit from these practices. Crypto arbitrage is a relatively straightforward concept. It involves the simultaneous trading of cryptocurrencies on multiple exchange platforms. Here is the mechanism behind it. Suppose you commence your trading journey on Coinbase and decide to sell a particular cryptocurrency there. Subsequently, you transition to TRAQ and conduct a similar transaction with the same cryptocurrency. The key to arbitrage lies in capitalizing on the price differentials that exist between these platforms. To exemplify this, consider the following scenario. I am currently on Binance, and I observe that the price of Bitcoin is $34,737. If I were to switch to KuCoin, I would find that Bitcoin is priced at $34,731 there. These price discrepancies can be even more pronounced with other cryptocurrencies. Consequently, you have the opportunity to purchase a specific crypto on one platform and sell it on another, thus generating a profit. While this may initially seem like a daunting task, the reality is quite the opposite. It does not necessitate constant vigilance at your computer. These transactions can be executed within seconds. In fact, it is far less intricate than engaging in active day trading on a single exchange. Some individuals employ a comparable approach with physical products on platforms like Amazon. They source inexpensive items from platforms like AliExpress or Alibaba, purchase them in bulk, and subsequently resell them on Amazon for a profit. Nevertheless, this process entails complexities related to storage and inventory management. In contrast, the world of cryptocurrencies offers a much more straightforward approach. There is no need to concern oneself with the storage of physical goods, as the entire process is digital, facilitating quick and efficient trading. For those interested in embarking on the journey of crypto arbitrage, a wealth of free educational content can be found on YouTube and various online tutorials. Additionally, resources are available on platforms such as Coinbase and Binance. Despite the initial impression of complexity, crypto arbitrage is quite accessible. Now, let me elucidate the three primary forms of crypto arbitrage. Firstly, there is cross-exchange arbitrage, which represents the most fundamental approach. It involves purchasing on one exchange and selling on another, leveraging the price disparities between them. Secondly, there is spatial arbitrage, which entails exploiting price variations within the same exchange. Finally, there is triangular arbitrage, which is somewhat more intricate. It involves navigating a sequence of trades involving multiple cryptocurrencies to capitalize on fluctuations in exchange rates. These three methods exhibit their own unique intricacies, but the fundamental principle remains constant: profiting from price disparities within the decentralized realm of cryptocurrency. Achieving perfect price synchronization in the crypto market is nearly unattainable due to its inherent nature. For instance, among the various platforms available, individuals have the potential to achieve substantial financial gains through this method. The swiftness of this approach is a notable aspect, as transactions can be completed within a matter of seconds. Allow me to elucidate the procedure. Commence your engagement on a specific platform, discern a price differential, and promptly transfer this transaction to another platform for the purpose of selling. This method is remarkably time-efficient. The second form of arbitrage is known as spatial arbitrage, a term that aptly characterizes its global reach. An illustrative scenario could involve initiating your activities on an Asian exchange and subsequently transferring your cryptocurrency to a platform in either America or Europe. This approach is frequently adopted due to the challenges associated with synchronizing prices across diverse time zones, thereby creating opportunities for profit. The third variant is referred to as triangular arbitrage. This technique entails constructing a loop involving several different cryptocurrencies. For instance, it might commence with Bitcoin, traverse through Litecoin, Ethereum, Cardano, and other assets, and eventually return to Bitcoin. During this journey, a profit can be realized. Although it entails a higher degree of complexity, it can yield significant returns. Several considerations merit attention in this endeavor. Fees are of paramount importance since numerous trades will be executed, necessitating the inclusion of transaction costs. Each exchange platform imposes its distinct fee structure, seeking to secure their own profits. Nevertheless, it is possible to manage these fees to a certain extent. To embark on this journey, it is advisable to engage in thorough research of the various platforms and leverage tutorial videos for guidance. Commencing with smaller amounts as a means of gaining experience is prudent. Bear in mind that fees will have a bearing on your overall profitability. Allow me to introduce several platforms that offer set and forget options for arbitrage trading. The initial platform, rbsmart.com, furnishes automated arbitrage trading as an option. A similar service is provided by pionex.com. Additionally, crypto.hopper is renowned for its arbitrage capabilities. You may evaluate these platforms to ascertain which aligns best with your requirements. Some individuals even concurrently utilize multiple platforms to maximize their potential for profit. It is worth noting that the magnitude of your investment correlates with the scope of potential profit. Nevertheless, not everyone possesses significant funds for investment in cryptocurrencies like Bitcoin or Ethereum. In such instances, flash loans emerge as a viable solution. I must assert that I have not encountered a more advantageous solution than the utilization of flash loans. As implied by its name, a flash loan is a type of loan that requires repayment within a specified number of minutes, typically within the next transaction block. For instance, lenders may be hesitant to extend a loan if they have doubts about your ability to profit from a specific transaction. However, if they perceive the potential for profit, they are willing to provide the necessary funds, albeit with some interest. Therefore, if you have conducted thorough research and possess confidence in your profit-making capabilities, even in the absence of initial capital, platforms like avi.com can offer you a loan to engage in arbitrage trading. This implies that you do not need to use your own funds for investment. While a fee and interest are charged, akin to traditional banking practices, the potential for profit without the need for personal capital renders this option quite valuable. Flash loans are most ideally suited for high-speed arbitrage trading, where the simultaneous purchase and sale of assets in different markets are executed swiftly. Given the rapid pace involved, it is imperative to ensure the likelihood of generating a profit prior to obtaining the loan. The process necessitates diligence and comprehensive research to ascertain the optimal timing for acquiring cryptocurrencies on one platform and selling them on another. Borrowers, when utilizing these loans, are typically obligated to repay the loan along with the accrued interest within a single transaction block at most. Failure to meet this obligation results in the cancellation of the transaction, with the funds being returned to the lender. This mechanism mitigates risks for both parties, rendering it a secure approach. Should you harbor a genuine passion for this endeavor and possess confidence in your skills, accompanied by meticulous timing and strategic planning, the opportunity for success in this domain exists. By diligently executing your strategy, you may realize substantial profits. With dedication and effective implementation of your strategy, you may find yourself on a path to significant success. Best of luck in your endeavors.